So you have a really deep expertise in business bankruptcy, and I bet you can talk about it for a whole day. But just give us like a little bit of an overview, like what the heck is exactly business bankruptcy, and are we as business owners like at risk, or who is at risk, or how do we avoid this? Or
This video is brought to you by EpiPies Academy.
It's such a big, scary word, bankruptcy. Nobody wants to even contemplate it. It's not fun. I enjoyed the practice of bankruptcy because you can take people who are in a bad position and put them in a much better position. So that part's good. But, you know, when somebody's sitting in your office when you're a bankruptcy attorney, they'd rather be anywhere than with you. And fair enough. I mean, it sucks. So the goal is always to avoid bankruptcy. But it's helpful to know what it is and kind of, you know, when it might be applicable. So bankruptcy is really, it's the federal government saying you get to get out of jail free. So something has happened and it's gotten to the point where it's kind of out of control. There's too much debt, there's not enough income, and you need a fresh start. So there's two ways. One is a business bankruptcy where an actual business goes through bankruptcy. Those are Chapter 11s. That's like when United Airlines and you hear about all these big companies file bankruptcy. Those are Chapter 11s. They're super expensive. I mean, just to even start talking about a Chapter 11, you're going to be writing a check for $30,000, $40,000 with an attorney. It's a big, big deal. It's a big, big process. Most businesses, when they're in trouble, don't file a bankruptcy at all. They just close. They just close. Which brings us to the second kind of bankruptcy, which is a personal bankruptcy, which people don't really think of so much when they think of business. But because most people are so intimately tied with their business and there's a lot of personal guarantees that have gone on, a lot of times a business closure will force a personal bankruptcy. It's kind of like you see in divorce. If people get divorced, if there's some money trouble, a lot of times that'll force them into bankruptcy too. Because what you really need is you need then a personal fresh start, because if the creditors can't collect from your business now because your business doesn't exist anymore, they're going to start looking at you. So, and depending on, you know, if it's something small, then it might not be a big deal. You know, it's 5, 10 grand. Maybe you just, you know, you start another business, you get a job, whatever, you pay it off, you move on. But a lot of times it's like a commercial lease. So let's say you had a retail location, that could be a couple $100,000. You know, if you had a 5-year lease on a commercial location at $5,000 a month, that's going to be a big deal. If you owe back taxes, if you owe any employees money, if you have a line of credit, you know, all that stuff will force you personally into a bankruptcy. That's why financial savvy is so important, because people start businesses and they're just doing anything they can to get the business started. So they're just pulling money from anywhere and they're signing anything. And then when something happens, it just takes down everything. So it's pretty brutal. Generally what happens is the business will fold and the business owner, I mean, we have to look at how we're getting you out of this. So are we filing bankruptcy? Are we going to do some debt negotiation? What are we going to do to let you move on, really?